the U.S. will temporarily lower its overall tariffs on Chinese goods from 145% to 30%. China will cut its levies on American imports from 125% to 10%. Here's more of what we just heard from Trump moments ago.
We achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the larger structural issues. The talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week.
So for more, let's now bring in journalist Nick Harper from Washington. Okay, so Nick, you were listening into that press conference along with us, and we're now looking ahead to that potential meeting with Xi Jinping that Trump mentioned. What else did we learn from Trump about the trade deal with China?
That's right, yes. Potential meetings in the works for various people. Donald Trump himself hoping to have a phone call with Xi Jinping before the end of the week. No word yet from Beijing on whether that's going to take place. But of course, negotiators will have to have other meetings in the coming weeks during this 90-day pause on reciprocal tariffs, really to try and push things forward, to get this properly signed and to work through all of the details. One of the details that did come out of that announcement from Donald Trump when he was speaking at the White House was what is not included. Steel, aluminum, cars and pharmaceuticals are 4 areas that have not been included in this tariff reduction. Those tariffs all remain in place. Donald Trump saying that that was important for the US economy. But overall, he did seem to signal with this idea that it was a reset of relations, that things are very much moving in a much better direction than they have been for some time. Of course, there have been rocky relations between the US and China for many, many years. During Joe Biden's presidency, it was a difficult period. These tariffs increased that difficulty even further. But Donald Trump did say that the relationship was very good, that the meeting was very friendly, and he is hopeful that this could lead to even more trade with China. He spoke about this idea of opening up the Chinese economy to get US manufacturers, US companies into China, to be operating inside China in a way that they're simply not at the moment. So he is very optimistic about where things could go from here. Arthi?
And Nick, what else are we hearing then from Trump's trade representatives who were part of all these discussions and are already overseas?
Yeah, the 2 people at the centre of all of this, Scott Bessent, the Treasury Secretary, and Jameson Greer, the US Trade Representative. They were in Geneva for these talks, and they are the very people who are negotiating deals with multiple countries around the world. We heard about the speed of this because I think it took many people by surprise, not just the scale of the reduction, but how quickly it got done. Jameson Greer, the Trade Representative, said that that speed reflects that perhaps the differences were not so large. The Treasury Secretary, Scott Bessent, said it was important, both sides recognising that they don't want to decouple, that they wanted trade, but they wanted that to be balanced trade. And perhaps in many ways, those comments could be seen as something as a blueprint for other countries, including Canada, who are looking to try and do deals at some point with the United States to get tariffs reduced. Of course, a lot more still needs to be done on this China deal. The devil will be in the detail, and that needs to get hashed out over the next 90 days.
Nick, thank you for this. That is Nick Harper reporting from Washington. And the trade war has already affected the U.S. and Chinese economies. So now, for more on all of that, we've reached Martha Harrison in Burlington, Ontario. She's an international trade lawyer and partner at McCarthy Tétrault. Thank you for joining us today.
Thank you. Nice to see you, Arthi.
So, of course, we'll also discuss what this means for Canada-U.S. relations. But I first want to begin with your reaction to this deal between China and the U.S.
Well, thank you. I think it's certainly a step in the right direction. The tariff percentages that were in place in China and in the United States were effectively equating to a trade ban between both countries. No importer in China or in the U.S. could sustain taxes of over 100% time and time again. So definitely a step in the right direction. I think the question remains, though, what the deal actually means practically speaking.
And of course, that is something, as we heard from a reporter in Washington, that we'll have to wait and see when the deals are all signed and the details are all available. But let's now sort of extrapolate, if we can, to what this might mean for those negotiations with Canada. Certainly, we heard a question there when Donald Trump was speaking and taking questions from reporters about steel and aluminum and the auto industry. Now, we should note here that this agreement reached between China and the U.S., between these nations, that it does not cover tariffs on cars, steel, aluminum, or pharmaceuticals. So what might we take away from that when it comes to Canada's discussions with the U.S.?
I think the most important piece is that the tariff reduction, as you rightly noted, was in reference to the reciprocal tariffs as between both countries. But there are still key commodities that are very important to Canadian economy that are not included in the U.S.-China deal. As you said, notably steel and aluminum, automobiles, pharmaceuticals, et cetera. And so what that means for Canadians is that those who are engaged in the steel and aluminum sector are still faced with those steel and aluminum tariffs as the goods enter into the United States, as will Chinese goods be faced with those same tariffs. You'll note that the deal on the U.S. end between the United States and China contemplates a reduction of U.S. Tariffs on Chinese goods to 30%, because that there is still a 20% margin for the so-called fentanyl tariffs. So it's not actually a true reciprocal reduction in tariffs because there are still other tariffs that remain in effect beyond the fentanyl, as you said, in the steel and aluminum sectors, for example. For Canadians, what this also means, however, is potential good news from at least some break in supply chain tension. To the extent that Canadian industries are relying on goods originating in the United States, coming to Canada that may contain some Chinese parts. If those goods are noted on the Canadian retaliatory surtax list, it may mean that the value of that good can be sold at slightly less if there's less tension on imports into China for constituent ingredients that will eventually make their way to Canada. So we may feel a slight reprieve, although candidly, the deal that has been struck between the United States and China really is not a wholesome deal as of yet. And I suppose that's why there is this 90-day pause for both parties to continue to negotiate.
So when we look at the strategy then that is used here, we're talking specifically about the reciprocal retaliatory tariffs, for example, because we know some of the core that we're talking about, cars, steel, aluminum, pharmaceuticals, etc., tariffs remain on those particular products. Canada has indicated it intends to keep its retaliatory tariffs in place until all tariffs are dropped. So is that a very important part of the leverage and negotiating tactic coming from this side?
Indeed it is. And Canada has been clear that those phase one or so-called phase one retaliatory surtaxes will remain in place. It's important to remember that those are not a blanket surtax. So it's not a blanket tax in the same way that the United States is enforcing sort of a blanket tax on Canadian imports unless they are USMCA or CUSMA satisfying. But there is an interesting additional note to that, in that there was also a phase two list that Canada threatened to impose, retaliatory surtaxes on the United States. At the moment, that phase two list has been paused. And I think that can be interpreted as Canada's willingness to negotiate and to not seek to continue to rise up, the tension between both countries. But for now, what's important is that Canada maintains some leverage in discussions with the United States, and those phase one retaliatory surtaxes will actually keep that leverage. I think in terms of commentators and what we're reading now with respect to what that U.S.-China deal means for Canada, despite some sort of positive framing, there are some commentators that view the agreement actually as a bit of a retreat from the United States, prompted really by market instability in the U.S. that was created, in fact, by the trade war, not just with respect to the trade war with China, but with respect to the trade war with Chinese important trading partners, including Canada. And so with the U.S. key retail markets continuing to suffer, that may create additional leverage for Canada on which to rely in future negotiations to try and settle this tariff issue once and for all with the United States.
You know, Martha, you touched on it right there, but I just wanted to ask you for a little bit more detail in terms of the cabinet that we might see unveiled tomorrow and the key people who will be in charge of that file. What might the new ministers handling this learn from this development that we're seeing here in terms of dealing with the U.S.-Canada tariff tensions?
It will be very interesting to see who Prime Minister Carney has in these key portfolios that will be charged with the negotiation and the review of the trade war. I think that the key negotiators for Canada, in whatever portfolio they may be in, are really going to see from this exchange with China that there is an interesting opportunity to negotiate with the United States. It is clear the U.S. markets are feeling continued tension. It is also clear that inflation is creating very challenging times for consumers in the United States, notably as we get into a key procurement time in the summer when typically retailers will source for the holidays, Christmas time, New Year, etc. And so taking advantage of the timing of procurement phases during the year will be an interesting opportunity for Canadian negotiators. I think they can also take from this the fact that the president's key drivers here, Bissett and Green, appear to be eager to achieve some political wins for the president. And so even if at its face, this isn't necessarily a massive political win because goods that are Chinese entering into the United States are still going to be subject to a 30% tax, which is significant. It can be characterized as a win. And I think it would be important for Canadian negotiators to pursue the timing of procurement right now and the ability to characterize future negotiations with the Trump administration as a win. Politically, that could make all the difference.
Martha, I want to thank you for your thoughts and for your time today. That is Martha Harrison. She's an international trade lawyer and partner at McCarthy Tétrault. Thank you.